This is the Bishop Cross-Border Investment Services podcast. I'm Lee Scully. I'm an investment associate advisor. This is Stephen Bishop. He's our lead advisor and our founding member. We help cross-border situations in terms of brokerage accounts and in the investments. So most of what we do involves Americans moving here, Canadians moving down, and then the intricacies of having accounts and investments on both sides of the border. One thing that we've seen a lot recently, and I'm sure we'll see a lot more of it going forward, is Canadian residents inheriting U.S. assets, or vice versa, but mostly it's people that are already in Canada, and then they come into, whether it's an IRA or any form of inheritance, and they have questions about how does that work? What are my obligations from a tax perspective? Do I have to report this? It can get intricate. There's a few different ways to think about it depending on what the assets are. Generally, the most popular is in an IRA, so an inherited IRA. What we typically do for someone in that situation would be they come to us and ask us, how do I handle this inheritance? And if it's an IRA, it's actually fairly simple in the sense that we would open up an inherited IRA, which is a U.S. domiciled account. So it remains U.S. domiciled. They get the tax deferral. It stays intact, right? And they're a Canadian resident. So it's compliant because we can do that. And then from there, it's within 10 years. There's a 10-year withdrawal rule. So within 10 years, you typically have to deplete the value of that account, whether you do it all in one chunk, whether you do even chunks over 10 years. It can be variable. Do you have any thoughts, Stephen, on that whole topic based on your experience with this?
Yeah, it's kind of one of those odd things because where it differs from someone who's moving here, so a person, a couple, a family, they're living in the States and now they're going to change the residency to move to Canada, and now they have to deal with this cross-border issue. With the inheritances, it creates a very different scenario because typically the individual who's inheriting the assets lives here.
Right.
They moved some time ago, or they were born here and they stayed here, or any other version of that. But the entity who has designated these Canadian or Nova Scotia residents, let's say, as the beneficiary of these accounts, lives in the States, and so the person that's inheriting the assets now is in a bit of a dilemma because they're dealing with an estate that's domiciled in a state that needs to be settled, that's domiciled in the United States.
And the executor might be there too.
And almost 100% of the time, it's a U.S. executor. There could be U.S. trust accounts that they're beneficiary of, and so on. And depending on the trust, it might be a trust that needs to continue, and they become a trustee, but the trust has to stay domiciled in the States, and it creates a bunch of different scenarios for that person. However, that being said, that person needs to find someone who is dual licensed, cross-border, that can offer cross-border investment services, because just like the ones that move here, the people that live here that are inheriting the assets deal with the exact same issues. So let's say it's they're a beneficiary on an IRA, a U.S. IRA. Well, in the States, you can be a beneficiary of an IRA that's your parent or your aunt, uncle, brother, sister.
Yeah.
Okay.
Yeah.
That's not the case in Canada. Okay. So let's just say, Aunt Nell that lives in New York City has this huge IRA and no children, and has one nephew that lives here. Mm-hmm. And so Aunt Nell designates, John, who's living here, let's just say, for example, as the beneficiary of that. And so now John has to find. Now John is contacted by the executor and says, "You're the beneficiary of this estate. Your Aunt Nell has put you on that." He goes, "Well, I didn't know that." And he goes, "Well, you now have $10 million, and well, you're going to have to deal with this." So then that individual needs to find somebody or a firm that is cross-border licensed that can hold that IRA in the States, like what we can, because we're dual licensed.
Yep.
And then they can, and then work with that client on the distributions and so on and so forth. It's actually it's very common now. Excuse me. And with this, everyone talks on the news or the business news about this great wealth transfer that's going on between all the baby boomers,
the aging population,
and all the baby boomers, and so on. So it's something that I expect we'll see more and more and more of as time passes. The message that we can send to anybody who's watching this is that we can do it, and they just need to contact us and ask the questions. And the estate could be more complicated than that. It could be that they've inherited an IRA, but there's also a U.S. trust.
That's right.
That they're a beneficiary on, or there's a U.S. Brokerage account that's full of stock positions that they're a beneficiary on, and so on. So that individual. It's different from the people that move here and change residency, but it's the same in the end.
That's right.
It still requires the same platforms and the same services to manage the money, but we can do it which eliminates any significant tax implications, because they just take it over and then they take their income off of it, or their distributions every year and so on. So
we can do it, and we can also get them in front of the right people for the tax component of those situations, which is important.
Cross-border tax, yeah.
So there's always two pieces to the puzzle, at least, right?
Yep.
There's our piece, the investments, and then there's the tax piece.
Yep.
It's important to have both.
Yep.
And that's one situation. The IRA is probably the most common. So it's an IRA with the original owner, and then when they pass away, it becomes an inherited IRA, which triggers that 10-year rule of needing to draw down the account.
10-year withdrawal.
Exactly. Yeah. And then when it's not an IRA, so maybe there's a trust, maybe there's a taxable account of some kind, anything different, there are a few other rules that often come into the tax side of things. Yeah. So in general, Canada does not have an inheritance tax. So, however, things that generate income are taxable, right? That income is taxable. So you might receive a windfall that has no inheritance tax levied on it. But if those are income producing assets, like a stock that pays dividends, like a rental property that pays rental income, that's where you have tax reporting obligations. Depending on where the assets are and come from, that can trigger some reporting requirements. For example, I know if you've got a foreign account that is above $100,000 Canadian in value, you have to report that. It's not necessarily taxable, but it has to be reported properly. Mm-hmm. I can also remember these specific rules about on the gifter side. So on, let's say it's an estate planning situation where maybe they're inheriting something or they're being gifted something from someone who's still alive. That requires some planning too. Especially from the gifter's perspective, there's what's called the U.S. gift and estate tax exemption. So you can actually gift up to $15 million tax-free from the U.S. side of things. However, it becomes reportable after a certain threshold. So there's a few intricate details that need addressed.
Yeah, so that's where you get into, this. I mean, you're right. It just gets bigger. It gets
bigger and bigger.
It just gets bigger and bigger. But yeah, everything you're saying is correct. And if talking to cross-border tax professionals, when someone gets into that situation is crucial. You just have to get the proper tax advice, and then with what we do, because of the dual licensing, you can get the proper structures for holding all of these accounts, and then with those two together, you can get your solutions. So
exactly.
Yeah. So if you're somebody that's been told that you're inheriting U.S. assets and a beneficiary of U.S. IRA, click the contact us button and start the conversation, and we can help you.
Yeah, Stephen, you're right. They can contact us. They can follow our podcast. They can look at our blogs. There's all kinds of information. And the real thing we want them to do is contact us. Exactly.
Because they need that. If they've gotten that far, they need to know what to do.
Yeah.
Once you get the contact, you're in the loop.
Certainly reach out, contact us. Every case is unique. And yeah, thanks, Stephen. Appreciate your thoughts.
You're welcome.